A very good afternoon, everyone. I hope that all of you are doing well, and also at the very same time, I hope that you are able to hear me very, very clearly. Welcome to week 11 of the semester. Time is flying away very, very fast. Just a few weeks ago, we had started up with week 1. Now we are in week 11, and we have 4 more weeks to go, 12, 13, 14, and 15, till we enter the study break. Okay, so 4 more weeks to go for study break, 5 more weeks to go for your final exams. So I hope that you're keeping up. Moreover, I also hope that you are keeping yourself safe, you're keeping yourself energized, and also motivated to learn more and more. All right. Okay. So for week 11 of the semester for CIN708, okay, we will attend the Zoom lecture session, which is this particular class. You're also supposed to attempt your tutorial questions and submit it in the provided forum. So you have these questions from questions number 1 to 13 for your week 11 tutorial, the critic writing, and also on the case study. We will be discussing this in our Friday's class from 2 to 4 p.m. Moreover, you're also supposed to start work on your research project and presentation. By the way, the research project is already up on Moodle. I've just released it about 5 minutes ago. Okay, so do feel free to go over my assessments section of the Moodle shell under research project 15%. Okay, you are supposed to start your work on the research project. Now, the detailed discussion of your research project will be taking place in the Friday's class. So we'll go over it very, very in depth, and then we'll go around discussing few things and building up the formations in terms of how you will actually go and attempt your research project, which carries 15% towards the coursework. Now, apart from your research project, okay, so you also have 5% which carries towards your presentation. So I will be also putting it up over here. Okay, in fact, let me do it straight away so that you do not get confused. Give me a second, everyone. So those of you who have joined us, thank you very much. I appreciate your presence in the class. So let me just go and edit this very, very quickly. So your research project 15%, okay? And then plus presentation is 5%. Okay. Now, presentation. Now, we will not be actually doing the presentation kind of presentation in the class. So what you will be doing for your presentation is you are supposed to record your presentation. Now, how can you record your presentation? You can get it recorded via mobile phone, or you can actually, I would suggest the best way to record is through the use of Zoom. Just like we are conducting classes and I am recording your Zoom sessions, you can also go around recording your presentation as well. Okay, now that is supposed to be done in alignment with the research project that you are working on. Let me edit this also very, very quickly. Alrighty, now that's done. Okay, so this is where you'll go around submitting things. Now, more on it will be discussed in your Friday's class. So also ensure that you are very much coherent and available in your Friday's class so that we can go over it and you can understand these things very, very clearly. Now, for today's class, it's our lecture class, and we have quite a lot of lecture slides. We have 55 slides. I will try my best to explain it in as simple terms as possible. Also, at the very same time, we will try not to read each and every slide, okay? Whereby I feel that things are important, we'll go over them. Otherwise, we will quickly just go and read them out. Okay, now I'm planning to finish this in 1.5 hours. So let's begin with this. Now, week 11's lecture is basically on enterprise applications, business communication. Now, when you talk about enterprise, the word enterprise means organization, it means a business, okay? And applications in computing terms, it stands for the word, or it means the same thing as the word software. So enterprise applications, in other words, would be organizational softwares, okay? So, and the major purpose of these organizational softwares or enterprise application is actually to ensure business communicates very well from one department to the other, from one employee to the other, and there is proper deployment of data / information within all the departments and within all the relevant stakeholders of the organization. Now, there's a specific kind of software that allows us to do that, and we will be talking about this kind of software. Section 8.1 in overview, we'll be looking at enterprise systems and supply chain management. We'll look at how we can go around building corporate connections through the use of integration. The word integration means you combine something together. Supply chain management. Supply chain management is a type of a information system. And then we have technologies reinventing the supply chain. So which technologies are or have evolved the supply chain management into a reinvention. Section 8.2 is customer relationship management and enterprise resource planning. Now, customer relationship management, or CRM, as you call it in simple terms, and enterprise resource planning is ERP. Now, we'll look at customer relationship management. We'll look at the benefits of it. Likewise, we'll look at ERP, the benefits of it, and how an organization can integrate itself to meet the capabilities of an enterprise resource planning system. So first of all, section 8.1, we'll look at supply chain management. The learning outcomes for section 8.1 is explain integrations and the role they play in connecting a corporation. So we'll talk about how integrations work. Actually, there are 4 types of integrations and how each of them play a specific role in an organization. Learning outcome 2 will describe supply chain management and the impact that it has on businesses. And finally, we'll identify 3 technologies that are reinventing the supply chain management. Okay, first slide, building a connected corporation through integrations. Now, integration, what it does, it allows separate systems to communicate directly with each other, eliminating the need for manual entry into multiple systems. So in an organization, sometimes you may have different types of systems. You may have a payroll system, you may have a HR system. In case of universities, you have a student management system, you have a staff management system, and so forth. Okay, now when, let's say, if you combine all those together, the process is called integration. Now, application integration. With application integration, what you are simply doing is that you're combining separate applications together. For example, like I mentioned earlier, student management system, staff management system. Moreover, you have payroll system, you have HR system. When you combine them together, those different types of softwares is called application integration. Data integration, whereby data from different applications are taken out and they are combined into one system. That's an integrated system. Now, forward integration. Okay, now forward integration basically sends information entered into a system to all downstream systems and processes. A very good example of a forward integration would be something like this. So you have example, let me give you something out of the IT example. So let's say you have a baker, okay, a person who bakes. So the baker, if he or she basically practices forward integration, what he or she will do is he or she will go and buy or open up a bakery shop. Forward integration, that means any type of data that is achieved from later stages is integrated into it. Okay, so a baker is someone who bakes cakes and stuff. So then he or she buys or opens up a bakery store. So that is a forward process. Okay, cake, somebody is baked cake and then sells it to someone, and that someone basically sells it off. So what the baker does, instead of having a middle party, he or she basically goes and buys up a bakery. Now, backward integration is whereby you are making use of the data that is basically produced before the current process. Let's get back to a baker example. So let's say a baker is someone who bakes stuff. So if he or she is supposed to practice backward integration, what he or she does is he or she goes and buys a wheat processor or a company that produces flour. Okay, backward process. All right, so remember, you need flour first, then you can have a baker who bakes and then you sell it off. So baker is a current stage, backward is buying a wheat processor or a flour producing company. That's backward integration. Forward integration is when a baker goes around and buys or opens up a bakery. Now, in business kind of or platform, where a forward integration is when a current process is affected by a future process. And backward integration is when a current process is affected and integrated with a past process. Okay, in other words, if you look at forward integration, okay, is just like you are trying to produce a product. Okay, so you integrate the system which records the production of a product with a system that sells the product. That's forward integration. Now, backward integration is you have a sales system, you go and integrate it with a production system. So backward integration. Now, integration, like I mentioned earlier, so all those 4 types of systems, you have a sales system, you have an order entry system, you have an order fulfillment system, and you have a billing system. Now, when you combine all these together, what happens is generally you come up with the concept called integration. Now, forward integration of customer information is represented by the arrow pointing towards the right. So this is your current state, future state, current state, future state, current state, future state. Okay, so what you're doing is you're integrating a system which basically allows you to move to the next process. Backward integration is more like a past state. So let's say your current state is order entry system. So your past state rather is a sales system. So you combine it together. Now, central information repository. So it's just like you have a central system that controls all the other types of repositories. By the way, the word repository means a database. So you have a system, or you have a system basically which is connected to all the different types of systems within the organization, and the central system ends up controlling the other types of systems. Now, in the slide which is represented, you have a customer information system. So everything is stored in it, and what it does, it integrates and connects up to the order entry system, sales system, billing system, and order fulfillment system. So these 4, okay, these 4, 1, 2, 3, 4, they can be combined, and you can just have one type of repository or database called customer information system. Now, integration tools. Enterprise system provides enterprise-wide support and data access for a firm's operations and business processes. Now, enterprise system is a software, okay? Now, generally, there are organizations may have different individual types of software for each and every process, or they can have a all-in-one information system, which basically can cater for the entire organization. Now, that kind of application which caters for all-in-one is called an enterprise system. Okay, a software which controls and tracks data for the entire organization. Now, enterprise application integration, what it does the work of an enterprise system, but over here it goes around integrating all the other separate information systems. Middleware. Now, middleware generally comes from two words. First one is middle, and the other one is called a software. So that means a software that is somewhere in the middle. So this is a very simple way in which you can understand the definition of the term middleware. Several different types of software that sit between and provide connectivity for two or more software applications. Now, middleware is sometimes also called as an intermediary software. Intermediary software is just like, it comes from the word inter and median. So median, if you have 4 values, let's say if you have 5 values, so that third value would be the median, something that is in the middle. All right. So middleware, it is a software that rests between two other processes or two other application softwares and provides connectivity between the two. Now, enterprise application integrated software is the very same thing that we have discussed in middleware, but what it does over here is you have multiple different types of applications. So the middleware tries to allow connectivity between those different types of applications. There are 3 basic types of enterprise systems. You have a supply chain management. So the supply chain management basically looks after all the data and information which is produced by suppliers. You have customer relationship management. It has to do with all the types of data or information that is related to customers. And then you have enterprise resource planning. So ERP basically looks after the entire data management or information management of an enterprise or an organization as a whole. Supply chain management, CSM. The management of information flows between and among activities in a supply chain to maximize total supply chain effectiveness and profitability. Now, what happens is with supply chain management, basically this is implemented in organizations who act as suppliers. So what they do is they produce a product, they manufacture it, they distribute it, they retail it, and it is sold out to the customer. So this particular type of information system controls all this type of data in supplying, manufacturing, distributing, retailing, and selling it to the customers. Now, why do you need a supply chain management? Is it possible to work without a supply chain management? Yes, it is. It's not that without a supply chain management, you cannot work. Yes, you can work, but what happens is a supply chain management allows an organized control of the entire process in a supply chain. Moreover, it brings out a total effectiveness in the organization, and eventually it will reduce costs, increase revenue, which leads to an overall profit. The supply chain management has 3 main links. You have material flow from suppliers and their upstream suppliers at all levels, transformation of materials into semi-finished and finished products to the organization's own production process, and then you have distribution of products to customers and their downstream customer at all levels. Now, level 1, or the first link that you have, what happens is basically the materials are given into the supplier. That's 1. Second, the supplier converts that material into a semi or a finished product. 3, once the product is finished, it is distributed to the customers, and then it is sold to the customers to the use of retailers. For instance, let's look at an actual example. Now, let me think of it. Let me think of one. Okay. All right. Let's talk about a furniture manufacturing organization. For example, Subrails Furniture. Okay. Now, majority of their furniture, they import it from overseas countries, and also probably let's say half and half of it is produced locally. So the materials that you need for furniture is, for example, the main material is wood. So the first link basically caters for wood supplied to Subrails. Now, once wood is supplied to subrails, comes to the second phase here. Okay, so the wood is transformed into fancy and beautiful furnitures. After it is produced, what it does, then subrails either sells it off in their own furniture stores, or they may sell it to the other retailers to sell it to the customers. So these are the three main links in a supply chain. Okay, very much similar to what we have talked about. Now, effective and efficient supply chain management can enable an organization to. Now, this is the main reason why I had gone around discussing at the very beginning why we need supply chain management. It decreases the power of its buyers. Remember, when your supplier has control over the market, your buyer cannot go around manipulating prices. It increases own supplier power. So when there is when the supplier, basically they're able to manage things well, if they're able to produce things well, and if they have a good control over things, what happens is they may go around manipulating the price as per their needs and as per the supply. Now, increase switching costs to reduce the threat of substitute products or services. Now, with the supply chain management, it gives a certain set of liberty to the organization to go around and produce more products, okay? Or not just produce more types of products, but rather switch costs. Switching costs is just like they have produced an item for $2, now they're selling it for $10. I'm giving an example. So that's a huge profit margin of $8. So if there is a new product that comes in the market, the supplier knows that my production cost is just $2. So what I can do is, okay, instead of this, the new thread that is the market is selling the item at $9. And now what the supplier can do is they can sell it for $7. So that now allows them to switch costs very, very easily. Now, create entry barrier where thereby reducing the threat of new entrants. Okay. Now, entry barrier is just a way of saying that you are not giving a sense of permission, or you're not giving an organization or another organization a sense of opportunity to go and enter the market and start selling their own products or services. Now, how can a supply chain management do that? Now, with the use of a supply chain management, you are able to manage the data that is produced very, very effectively. With the use of these data, you are able to make efficient and coherent decisions. So once these decisions are made effectively, it leads to meeting long-term strategic goals. So in other words, you are able to make decisions which can manipulate the organization into a state whereby they can make a lot of profits. And hence, they are able to control the market and are able to produce goods and services at lower costs, or they can increase switching costs, or they can switch costs whenever they want to. And also they have more control over the market and not allowing a new entrant more opportunity to sell goods or services at a lower rate. Lastly, increase efficiencies while seeking a competitive advantage through cost leadership. Now, cost leadership basically means you are the leading or the organization. Let's say organization A is selling some products, so organization A has cost leadership. In other words, the price of an item that is sold to the customers, okay, so the company A is able to sell it at a price that no other organization is able to sell it for, okay? So therefore, you have a cost leadership. And if you're using a supply chain management, it increases the efficiency and effectiveness to do so. And these are given, same thing. Okay, section 8.2, customer relationship management and enterprise resource planning. Now, customer relationship management, like I mentioned at the very beginning, CRM, okay? Enterprise resource management or planning, ERP. Now, when you talk about CRM, you're generally more of talking about an information system that controls data and all the elements of information related to customers. With ERP or ERM, enterprise resource management or planning is just about all the data and information that is produced in the organization, inclusive of supply chain management and customer relationship management. And this particular software makes effective decisions and gives in effective ways to monitor and evaluate information. So 4, explain operational and analytical customer relationship management. Identify the operational and analytical customer relationship management type of. These are two different types of CRM, or a CRM may have two of these basic operations. Now, operational is whereby all the data that is produced in the organization while it is operating and is related to customers. Analytical data is all the data that is retrieved from the operational CRM, and it is used to look at the trends, the evaluations of it, and make some form of decisions to meet strategic goals. Identify the core and extended areas of ERM. Okay, so what are some of the core and extended areas? Discuss the current technologies organizations are integrating in enterprise resource planning systems. Now, customer relationship management involves managing all aspects of customer relationship with an organization to increase customer loyalty and retention and organizations rather profitability. Like mentioned earlier, CRM, it has to do with all types of data within the organization that is about customers. Okay, now supply chain management deals with suppliers. CRM deals with customers. Now, why it is used and why do we go around using it? What are the benefits? Firstly, when you have information about customers, you can make effective decisions. For example, if a customer tends to give in a form of a complaint about a product, now that complaint can be looked at something that is very, very serious for the effective running of an organization. And you can always go around going back to the customer and making some effective changes in the organization to avoid such complaints. Now, when you do that, what happens is that your customer feels that they are being given priority. Okay, thus customer loyalty. Now, if you put it the other way around, let's say you go to company A, you buy a shirt. Okay, so company A, when you go there, you have people who would hardly attend to you. You have people who would be talking to you in a very grumpy manner because they had dealt with a rude customer just before you. And then you have people whereby if you tend to, let's say, accidentally drop the shirt on the floor, they start scolding you. So would you go around buying things from that particular company A again? Probably not. Now, on the other way, on the other side, if you would go to company B, as soon as you enter, somebody greets you. Good morning, sir. Good morning, madam. How are you? How can I help you? Would you need some assistance? Something like that. So you got a greeting and you got some form of assistance from the salesperson. So you are very happy and you go around, okay, I want to go and see a shirt. So that particular salesperson takes you around and shows you a lot of different types of shirt. Let's say you picked one and he or she says, okay, let's go try it on, see if you like it. Let's see how it goes. So let's say you put the shirt on and you say, no, it doesn't look good, something like that. And the sales rep gives you another shirt to try it on, takes a photographs of you in your mobile phone and shows it to you. How does it look on you? Okay, and you are satisfied. As soon as you go to the counter to cash it out, okay, somebody packs your item very, very nicely, says goodbye and all those stuff. It also gives you a, let's say, a complimentary item for the day, something not worth too much. Okay, and you go all happy. Okay, so what will happen is you want to go to that particular shop, company B, over and over again. So in form of a business, if you look at from a business point of view, so if you have more customers coming to you every now and then, or a regular customer, so you call that something as customer retention or customer loyalty. Okay, so if the same set of customers come to you over and over again, buys items with you over and over again, and spreads good news about your organization all around, what will happen is eventually your revenue would increase and your profitability rate for the organization is also bound to take an inflation. Okay, So that's organization's profitability. Now, CRM key players. Now, with customer relationship management, we have 4 key players. You have lead, a person or company that is unknown to your business. Okay, you have account, an existing business relationship exists and includes customers, prospects, partners, and competitors. Contact, specific individual representing the account. Sales opportunity. Opportunity exists for potential sale of goods or services related to an account or contact. Now, let's say we are a business or we are an organization. Okay, for example, let's say we represent S. Nangindas Company Future Limited. Okay, so the lead in S. Nangindas case for their CRM is going to be any customer or any organization. Okay, let's say you all of a sudden step into not you or customer, you are the business, remember, a customer steps into S. Nanginda's outlet just by looking at a clothing item from the window, okay, and buys an item. So that person is a lead. You do not know that person personally, or that person does not represent an organization. An account would be generally a business which buys items from S. Nangindas on regular basis. Now, I don't know if you know or not, some of the clothing items S. Nangindas would give it out for wholesale to the organizations to sell it off in their shops. Even Jax does the same thing. Okay, so any business which has an existing relationship with S. Nangindas is called an account. A contact would be an individual person from an organization who buys items from S. Nangindas, okay, and basically represents the company. So let's say S. Nangindas generally supplies items to a company called XYZ. So the salesperson in the company XYZ generally liaises with S. Nangindas. So the salesperson is called a contact. All right. Now, company XYZ basically has a sister company which is just opened up in another location. So what company XYZ does is tells the salespersons of the sister company to go and buy items from S. Nangindas because the items is such and such. Okay, so that particular phase whereby XYZ telling the other company, the sister company, to go and buy items of S. Nangindas is called a sales opportunity. Okay, so 4 players: lead, it could be any person unknown to the business; account, existing businesses which has a relationship with a particular organization; contact is a person representing the account; sales opportunity is basically derived sales from an account or a contact. Now, in customer relationship management, these are some of the things that happens or is catered for. Okay, or this is how you can go around contacting your customers: text message, instant messaging, for example, Viber or Messenger; voicemail, voice call, email; web order. Web order is basically an online system or an online form whereby you can go and order items; phone order, meeting, customer service call, Twitter or Facebook. I think you should be very much familiar with the other concepts. Okay, customer relationship management continued. Organizations find their most valuable customers through RFM: recency, frequency, and monetary value. Recency, that means how recent or how recently a customer has purchased an item. Frequency is like when we talk about recency, example, if a customer has bought the item 2 hours ago, so recency, how recent. If a customer has bought an item 3 years ago, that's also recency, but not good for the organization. Why? Because has bought an item 3 years ago, that means something has gone wrong somewhere. Okay, frequency, how frequent does a customer purchase an item. For example, if I am a loyal customer to Jax, probably I would go and enter Jax every time I would be in town, or probably I would go and buy an item every time when I have, let's say, a event at my home or at work. Okay, so frequently, 5 times, 6 times, 10 times, 20 times, 100 times. Okay, sometimes it can be 1 or 2. If it's just 1 or 2, these are some of the areas that the organization needs to work into. If a customer comes and buys an item, let's say about 50 or 60 times in a year, you can also look at the data about that particular customer and try to target more customers as such. For example, if there's a businessman who buys such and such items every now and then, so you can always go and target some more businessmen, because that must be trendy with businessmen. Okay, I'm just making a blurred conclusion over here, but these blurred conclusions are actually part of customer relationship management. Just by looking at such type of data, you can make specific kind of conclusions. Let me tell you this. For example, Fiji Day is coming soon. You will notice that these clothing outlets, they will flood their social media web pages, they will flood their websites, they will flood the news media with advertisements on Fiji Day. Why? Because these are the times people generally go and buy items, products or services which are related to Fiji's independence. Okay, something with Fiji flag. For example, Jax, I just seen a few advertisements yesterday. They're selling, they're using the Fiji team, Fiji Sevens team, to advertise the t-shirts with Fiji flags on them. Okay, so it may work. Okay, I'm not saying it not, in fact it is working. It works. That's why they are posting it, or they are doing such much amount of massive marketing in such items. And finally, the monetary value. Now this is the most important out of all these things. Why? Because after all, if you are an organization, you are not very much about how often a customer comes. You are worried, but not too much how recent the customer comes. But what you should mostly be worried about is the monetary value. For instance, if you have a customer who just comes in once, who has bought items once, but he or she buys item for, let's say, about $10,000. I'm just giving an example. And then you have a customer who has entered the shop about 100 times, bought items more than 100 times, but has done a sale of about $1,000. So which customer is of more value? The first one, right? So the monetary value is something that is to be looked at with much higher importance. Now, CRM reporting technology. So you have, CIM technologies. So there are 3 types of them. You have reporting, okay? It's more like how data is recorded in the system. You have analysis. So the data that is recorded in the system, it is analyzed and evaluated to make some form of decisions. And predicting technologies, it is whereby you look at the data that is entered in the system, the data that is analyzed and evaluated, and try to predict few things from there. Okay, so reporting technology, analysis technology, and predicting technology is pretty simple. Okay, why it's pretty simple is something like this. Let's say if I have a record of a past 3 years of CIN708 students, okay, and I have all the marks of all the assessments till mid-semester, final exam, and the total grade. Now, looking at the data, what I can do some form of analysis. For instance, if I would make an analysis and I would say students who have scored, okay, let's say about 40 out of 50 in their coursework, there's a likely chance they may be A or in A+ grade category. There's a likely chance, there's a likelihood, or there's a probability of such result. Okay, analysis. So the reporting is the data that is recorded, probably a spreadsheet which has all the records of the students. Analysis is whereby I will go and take out certain items and then look at it. And when I say may get A+ or A- or A even, that's predicting. Okay, so CRM does the very same work. So it records data or reports data, it analyzes it, and then it allows the organization to make some form of prediction. Now, with the recording and analysis, most of it can be automatic. Okay, it could be computer generated. Now, predicting is whereby you will need to have some human brains in it. That's why such kind of decisions generally made with predicting technologies or with prediction is unstructured kind of decisions. Why? Because it's not something that you do regularly. Okay, it's something that you do once in a while and often leads to meeting strategic goals. So these are some of the details which you may go around reading at your own time. Okay, now the power of customer. Okay, now there's a saying that is normally said, the customer is always right, and now has more power than ever thanks to the internet. Okay, now generally not always the customer is right, but for a business point of view, your customer is always right. Now, if your customer says, no, this is something is wrong in here, okay, you need to, then you need to go and fix it. Why? Because if you will not fix it, that particular customer will not enter the shop. Sometimes your customer may be too fussy, maybe too rude. Probably you're thinking, why am I bearing such kind of customers? Why am I dealing with such kind of customers? But at the end of the day, that particular customer earns you money. If they earns you money, it's best to just keep on hearing them. Okay, try not to make similar kind of mistakes and make better decisions in future. Now, with the use of the technology, especially with the use of the internet, the customers have more power than ever. Now, look at the example that is given on that particular screenshot. So somebody is saying, do not buy Dodge, and there is a entire website on it. Okay. Now, not necessarily people will go around looking at that particular website and say, no, Dodge is bad. Okay. Not necessarily, but most of the people who would be in like the bandwagons. When we say bandwagons, people who would just join the crowd for nothing or without knowing things. So most of those who are bandwagons, okay, they will just go and make band comments about it even further, like what may happen in social media these days. I'm not saying each and everything is written wrongly, but sometimes people go around misjudging things is likely to happen. Okay, but from a business point of view, one bad reputation on the web and on the internet may prove very, very crucial. Now, the operational and analytical CRM, operational CRM rather, supports traditional transaction processing for day-to-day front office operations or systems that deal directly with the customers. Okay, when you talk about operational CRM, you're generally dealing with the day-to-day transactions of a business, something like a transaction processing system. Analytical CRM, it supports back office operations and strategic analysis and includes all systems that do not directly deal with customers. Now, analytical CRM, what it does, it takes data off the operational CRM rather, and tries to make certain decisions. Now, these decisions, they are generally done by people, most likely the managers, most likely the executives, and they will analyze the operational data. Okay, now why do they need to analyze operation data? To help make effective decisions, to improve operations within the organizations, to improve processes within the organizations, to gain more customers, to gain more revenue, or to reduce cost or expense for the organization, and so forth. Okay, so if you look at the diagram that is given, so you have an enterprise CRM. So there's two types. So look at the sales system, marketing system, and customer service systems. So they fall under front office operational CRM. If you look at the back office, okay, you have collaborative CRM system, you have data warehouse and data mining. And notice the difference between the two. Okay, with the operational CRM, most likely you will need to have some sort of people there. So what the people would do is people would enter those type of information within the system. Whereas the back office analytical, obviously you will need to have people in there, but they do not enter the information. They analyze the information with the assistance from the customer relationship management application. So you have something on marketing and sales. Now it is driven from these slides. In your free time, you can go over it. Okay, otherwise it's very much same as what we have been talking so far. Okay, marketing and operational CRM. The three marketing operational CRM technologies are list generator, campaign management system, and cross-selling and upselling. Now it is coming from here. Okay, so in a CRM, okay, these are some of the marketing operational CRM technologies. Okay, that means these are some of the things that are embedded or engaged or integrated in a customer relationship management. You have a list generator. A list generator is very much similar to a report generator. So it takes out a report of what you have just entered. For example, if you are using Microsoft Access, you can actually, you enter the data in tables, in databases, and then you are able to generate reports, very much likely. Now, campaign management system. Now, marketing generally deals with you going around and basically going out and making your product well aware within the society or within the country or worldwide. Okay, so campaign helps to do so. Now with the campaign management system, especially in marketing, is that if you are, let's say, if you are trying to market a specific product, a shoe probably, so the campaign management system will allow and give you details about how your marketing process is actually going. Now, a very good example is something that you will find on social media in Instagram and Facebook. Okay, what you can do is you can run marketing campaigns, okay, by boosting advertisements, and they will give you a marketing campaign management system log. In it, you will see how many people are actually viewing advertisements, how many people are sharing your data, how many people are commenting on it, how many people are liking, and so forth. Now, cross-sell and upsell. Now, cross-sell is basically is more likely one customer buying an item by looking at another customer. Okay, for example, S Nangindas, let's go and pick up S Nangindas again. They have put up a item on their social media page. So let's say I like it. Okay, I like the item and I shared on my page as well. Okay, and just by looking at my page, let's say Tom goes and buys that item. That's an example of cross-selling. Upselling would be an example whereby I look at S Nanginda's page, I like it, I go and buy the item. So that's upselling. Okay, cross-selling again, S Nanginda's advertising an item. So I have a look at it, okay, and then I like it, I share it on my Facebook page. Tom has a look at it, and then Tom buys it. Cross-selling. Upselling, in the other word, is more likely you are looking at S Nanginda's advertisement and buying it yourself. Now, in the case of a slide, it's saying selling and not buying. Okay, the example that I've given is on buying. Now, cross-selling is an example of you sort of selling your item with another organization. So S Nangindas may hire a company. For example, there's a local advertising company called Daily Deals Fiji or Fiji Daily Deals. Just recently I saw it. So they advertise items for sellers. So let's say S Nangindas hires Daily Deals Fiji, and with them, so what Daily Deals Fiji does is basically it takes off the advertisement and advertises on their page. And let's say Tom goes and buys the item from Daily Deals Fiji, okay, through the advertisement given via S Nangindas. Upsell is upselling whereby the organization S Nangindas tries their own best to sell the items from their marketing pages or from their websites. It's like direct sales. Now, sales and operational CRM. The sales department was the first to begin developing CRM systems with Salesforce automation. Now, a system that automatically tracks all the steps in the sales process. Now, with the Salesforce automation, okay, it's just like it's also an information system which tracks all the items that are involved, all the items, but rather all the steps that are involved in the selling process. Okay, and how does it record it? It records it automatically. Salesforce automation. So with the use of that, the Salesforce automation, somebody or an organization went around building it even further and calling it as a customer relationship management. And the work of the Salesforce automation is from the finished product that they receive to the stage of it reaching to the customer and money entering into the organization's bank account. That's what Salesforce automation was actually catering for. Now, CRM does the same thing, but even further. The CRM not only looks at the finished product till the moment money reaches the bank account, but it looks at other trends. It looks at other predictions. It looks at analyzing things, and then tries to make even more effective decisions for future usage. Now, sales operation long description. Now, this is the same. This slide is explained here in slide number 40. Now, sales and operational CRM. Sales and operational CRM technologies. Now, sales management CRM, we have contact management CRM and opportunity management CRM. Now, with sales management, CRM is basically the part of the customer relationship management, which handles all the sales. Okay, sales as in if a customer is interested to buy a product, so what product, what quantity, what price, if any discount given, and the total price at which the item was sold. Now, contact management system within the CRM system, what it does is basically it holds contact of all the person of it holds contact of all the customers. Okay, an opportunity management system, it looks at prospective uh, customers. So we'd say prospective customers is more likely the contact, like the phone number or the email address, and all the interested items that the customer may be thinking or talking about. Now, if I have to give an example, okay, with sales management, let's say I am a company, let's talk about company ABC. So all the items that I sell to my customer Tom, let's say Tom buys he buys 5 pairs of shoes. So the total cost of the shoes per shoe was $100, so $500 in total. So we gave him a discount of $10. So $490 was the total price. So what I will do is I will record the entry of the transaction as item sold, 2 Tom, 5 shoes, $100 each, which is $500 minus $10 discount makes it $490. What date, what time, and the way or method in which payment was made. So in contact management system, I will have contact of Tom. So Tom, okay, and his email address, his phone address, where he's staying, and so forth. An opportunity management system, let's say yesterday I received an email from a person saying he wants to buy some shoes on wholesale. Okay, so what I will do is I will enter the person's name, his or her phone, email address, and also the organization he or she works for, or the organization he or she owns, and then have it in the opportunity management CRM system. Now, 3 customer service operational CRM technologies. You have contact center, you have web-based self-service, and call scripting. Common features of contact centers is automatic call distribution, interactive voice response, predictive dialing. Now, with a customer service operational CRM, okay, is just about the technologies that you can use to get in contact with the customer, or the customer. Okay, so these may be a contact center or a call center, whereby a customer gives a call. So a third party, a call center, would be handling the call and then transferring the call to the organization. Now, web-based self-service system, this is where the customer would go on a website and try to buy the item himself or herself. Okay, and then call scripting system. Call scripting system is what is something that might that happens when you call, let's say, Vodafone. So when you call on 123, so it has some dialing options. So that is something we call it as a voice interactive voice response system. So there is a recorded voice. So that voice tells you to dial a certain number and it leads on to a certain process. So it's call scripting. Now, call centers, they use automatic call distribution. For example, if somebody calls, okay, just before while somebody if somebody calls the organization, so the call center will have an automatic system whereby it will tell you if you want to get in contact with the marketing department, call, or just dial a certain number, let's say 1, or if you want to get in contact with our sales department, call 2, with our order department, call press 3 from the phone. So that's an automatic call distribution. Now, interactive voice response is something like Vodafone. Now, there's a big difference between call distribution. Now, automatic call distribution is something that begins off even when somebody picks up the phone, or even when the call actually reaches the center. Okay, it leads on automatically. Now, interactive voice system is something that Vodafone does. So it's a recorded voice. So what the voice does, it commands you to do certain things. Now, predictive dialing is whereby sometimes you must have seen this, call FNU and also dial the extension 1025. So that's predictive dialing. Now, website personalization. Now, this comes under analytical CRM. Occurs when a website has stored enough data about person's likes and dislikes to fashion offers more likely to appeal to that person. Now, analytical CRM relies heavily on data warehouses, technologies, and business intelligence to glean insights into customer behavior. These systems quickly aggregate, analyze, and disseminate customer information throughout an organization. Now, website personalization, another word is something that we call is a context awareness. What it simply means is you will try to display a website to a customer based on his or her personality. Now, you must be thinking, how is that possible? Now, try this. I don't know if you've ever been to eBay.com or AliExpress.com. Go and view few of your favorite items. Let's say a few clothing line. So the next day, if you enter the website, what you'll see is it will start displaying you sale on certain clothing line and not on any other thing. Now that is an example for website personalization. Now, how does it happen? Based on your current viewing of the website, and there would be some certain sort of data that was stored in their data warehouse or in their servers, and then based on that data, so the next time when you enter aliexpress.com, it will try to display some certain form of information related to your previous search. Now, how does AliExpress know it's you and not somebody else? Now we have something called as cookies in our web browsers. So cookies are small data files or text files that keep track of your internet usage. One. Secondly is based on your logins. So the last time that you had logged into aliexpress.com, you were viewing, let's say, clothing items. So next time you log in, so AliExpress knows, okay, this is this particular person with this particular username and password, looks at the previous track, and then displays you that kind of items generally or mostly. Okay, now most of it is machine controlled. Extended CRM. Now, current trends, you have supplier relationship management, you have partner relationship management, and employee relationship management. Now, what happens is that CRM has mostly to do with customers. Now, overview, or if you try to have a look at what the current technology is going through with the evolvement or with the upgrading of technologies, now we have supplier relationship management as well. And partner relationship, supplier management relationship is between suppliers, how suppliers, they interact with one another. A very good example is Alibaba.com. A lot of suppliers coming on one platform and selling their items. So these suppliers are able to supply items to one another. Okay, for instance, if somebody makes a phone, okay, so somebody, let's say she is making a mobile phone. So not necessarily the person who makes the mobile phone makes all these small tiny parts, chips, sensors, and everything of the mobile phone. Somebody else must be supplying it. So this is where supplier relationship management comes in very handy. Partner relationship management is whereby some businesses or some individuals, they partner up with each other and to allow efficient flow of data within these partners. So PRM comes up. And employee relationship management. Now, employee relationship management is a common thing now. We have employee relationship management whereby employees' data is stored on these ERMs. Now, FNU has it, USP has it. I've worked for both of the organizations, so I very well know that they have the employee relationship management, and there are a lot of organizations which actually have an ERM or an employee relationship management. So what it does, it controls employee data. For instance, you can go and check your leaves, the availability of a leave. Not necessarily a person would be there seated, an accountant, he or she would track your leave. No, with the use of an employee relationship management, you can see your annual leave, you can see the amount of sick leaves that you have, the amount of sabbatical leaves, and so forth. You can also go and see your total wages. You can have your documents uploaded on the ERM, for example, your CV, your transcripts, and so forth. Enterprise resource planning integrates all departments and functions throughout an organization into a single IT or integrated set of IT systems so that employees make enterprise-wide decisions by viewing enterprise-wide information on all business operations. If I have to sum this up in a simple way, an ERP, what it does, it integrates all the flow of data within the organization and presents it into a single system. Now, why does it do that? It does it so that the employees of the organization can make effective decisions, which will lead to an efficient flow of information within the organization. Okay, so all types of data in the organization brought together into a single information system. So when people need to make decisions, they go and feed data off this system. Reasons ERP systems are powerful tools. Okay, now ERP is a logical solution to incompatible application. That means if there are 3 or 4 applications in an organization, separate ones, and it is very difficult to get data or feed data from one system into another, incompatible, not able to work together. Okay, so what happens in ERP can replace all 4 of them in a single system. ERP addresses global information sharing and reporting. Global means it can share information, okay, in an organization which is like a multinational based organization, or organization which is multiple outlets. For example, FNU, okay, we have a lot of campuses all around, more than 14 campuses around Fiji. All the staffs based at different campuses, all the students based at different campuses, they are able to view certain form of information or have access to certain form of information through the use of a single system. Okay, ERP avoids the pain and expense of fixing legacy systems. Legacy systems means old systems, systems that have been so old that they are near to obsolescence. That means they're about to fade out. Okay, so fixing very old systems may be very, very difficult. Why? Because the thing is, with the current way of how things are moving with technology, is a very fast-paced world, especially technology, as technology changes every now and then. So over time, what happens is that there would be some hardware or software which may not operate with your old information system. So therefore, with the ERP, you can remove that old system and get a new one. And basically, it will reduce your cost overall. ERP systems collect data from across an organization and correlates the data generated in enterprise view. Okay, we've talked about it, data from all the different departments of an organization fed into a single system. Now, look at this. Now, this is important. The organization before ERP. Now, before an ERP is introduced in an organization, as per the diagram that you're seeing on the slide, so you had a separate department or a separate information system for document management. You have a separate system for workflow. You had a separate system for enterprise planning. You had a separate system for sales, logistics, finance, HR, portal and website, and project management. This reminds me how FNU probably was a few years back when we didn't have an ERP in place in the organization. It also reminds me a lot of other organizations which I have read about on the web, okay, how difficult things are once you do not have an ERP. Now, without an enterprise resource planning, what happens is generally the flow of the work becomes very stagnant. It becomes very slow. Okay, and this is whereby you cannot have everything running electronically. Sometimes you may have to run things through the use of paper documents. You'll have a lot of staffs. Okay, you'll definitely have a lot of staffs doing and performing all these things. But when you have an ERP, you will get to combine all the systems into one. So everything in a one central repository, and with the use of that, what happens is generally it reduces a lot of errors rather. Why? Because when you have so many different types of systems, so many different people entering data into the system, there's a likely chance you have a lot of errors. 2, there's a lot of cost in maintaining all those separate systems. 3, you pay a lot of people to perform so many tasks. 4, decision making becomes very, very difficult. It becomes very odd rather. Why? Because all the departments will come in together, they will present reports from their different types of systems, and then all those reports will be compiled, and after compiling it, they'll do presentations. The executive members or the managers of the organization will sit back and make decisions. Over here, everything is at a one-stop shop. Okay, so if you need information, you can integrate data. Okay, integrate all data and analyze data and get the reports flowing from a single system. It becomes very easy to make decisions. Now, core ERP component, traditional components included in most ERP systems, and they primarily focus on internal operations. Extended ERP component, extra components that meet the organization's need, not covered by the core components, and primarily focuses on external operations. Now, with core ERP is you're just looking at the internal matters within the organization. With extended, you're not only looking at internal, but you're looking at external matters as well. So if I am supposed to implement an ERP in an organization, I would suggest extended. Why? Because with the internal flow of data, you have external flow of data as well. Your customers, your suppliers, your competitors, okay? These are external flow of data. Apart from that, the economy, the government, the market, and all those things. So you need data about all the other external things and then make effective decisions so that you are making current, you're making accurate, and moreover, you're making decisions that is more towards future goals and not just current goals only. So if you look at the core ERP, okay, it talks about material planning, order, entry, distribution, general ledger, accounting, shop floor control. That was what was happening during the 1990s. Now in early 2000, we had extended ERP, whereby apart from all this, it started looking at scheduling, forecasting, capacity planning, e-commerce, warehousing, and logistics. Okay, forecasting means you predict things in the future. Okay, e-commerce is buying and selling of things on the web. Now in ERP2, that is what we have at the moment. Apart from all these, from ERP and extended ERP, it also talks about project management. It talks about knowledge management. Knowledge management, that means the knowledge that has been reserved from the expatriate staffs or some specific kind of knowledge that leads to the overall benefit for an organization. You have workflow management, you have CRM, you have HRM, you have portal capability and integrated financials. So the last one, what we have in present, you'll see how technology has moved from something very plain and simple to a stage whereby we have so many different things. Now, knowledge management, and if you look at portal capability, portal is just like a platform where people can log in and view things about you. Or for example, let me do it like this. For instance, if I would like to go and view my staff record in FNU's server or in FNU's computers, there is a staff portal up on FNU's website. If you want to go and view your results for CIN708, you have a student portal on on FNU's website through which you log into Moodle, and it provides you with a place whereby you can go and view in your certain types of records. So portal capability. Now, most of these, especially in the present day ERP, the ERP2 that is written, okay, now these are mostly controlled by artificial intelligence. They're controlled by machine learning. That means machine try to learn certain aspects and gives you knowledge on it. Okay, so these are very much computer driven. Now, even those were computer driven as well, but they didn't involve AI or ML, machine learning. So let's look at ERP. So the modern day ERP, it handles accounting and finance. It handles production and materials management. It looks at human resources, HR. You have business intelligence. Business intelligence, remember, type of data and information that leads to effective future decision making. Customer relationship management deals with customers. Supply chain management, and you have electronic business. Now, if you look at even more latest ERPs, that's what you, by the way, when you talk about ERP, that's what your current or your recent research project is all about. It's about ERPs. So if you look at some of the current day ERPs, they also have mobile business as well. So you have e-business, and then mobile business is also very much trendy these days. So most common core ERP components, you have accounting and finance, production and materials management, you have human resources. You know what accounting and finance is, okay? Managing of accounts of a business, production and material management, the raw materials that you have and how it is produced into a finished product. Records of all that is there in the ERP, you have human resources, people who work within the organization, reports on them, and we have explanations of all those on accounting and finance ERP component. You have production and materials management ERP component and human resources. Okay, and there are a few things listed of what all things are tracked. You can probably go and read this over. These are not so important, but I would suggest for you to know them. Extended ERP components, you have business intelligence, you have customer relationship management, you have supply chain management, and then you have e-business components like e-logistics and e-procurement. So business intelligence is about how data is managed, and that sort of data is converted into information, and that information is converted into knowledge. There's a big difference. Data is something that is raw, something that is entered into the system without much meaning. So once converted into a meaningful form, it is known as information. And information, when it is used to make effective decisions, and that decision is very much workable, or it's working, or is very effective and very profitable to the organization, that information becomes knowledge. So business information allows you to reach from data to knowledge. Customer relationship management, it handles all details about customers within the organization. Supply chain management, it handles all the details about suppliers within the organization. And then you have e-business. E-logistics, it is whereby how things are performed, how things are done, and how it will be done. This is done in electronic form, in e-logistics basically looks after it. E-procurement is about you buying things from other organizations, and the record of it in electronic means is recorded under the e-business component. Now, ERP systems contain multiple complex components that are not only expensive to purchase, but expensive to implement. Very true. Okay, the cost of an ERP for an organization may sometimes be very, very costly. For instance, if you own a small organization, when I say small organization, for example, an organization like, let's say, an organization like, let's say Minos, for example, okay, if they implement an ERP, it would cost them close to about 100,000 or so. But if you're talking about an organization like FNU, probably we're talking about millions. Okay, now you must have heard over the news last year, or probably early this year as well. FNU has implemented into a banner ERP system costing about $28 million. Okay, it's very expensive. Now the costs include a lot of things. Not only just includes the software, it includes fees for the consultants. Okay, some of the process needs to be realigned to match the process of the ERP. It needs a lot of customization, integration, testing, and training. Now, SCM, CRM, and ERP are the backbone of e-businesses. Integration of these applications is a key to success for many companies. Integration allows the unlocking of information to make it available to any user, anywhere, anytime. Now, CRM, SCM, and ERP, okay, when you combine them, generally the combination term is called integration. That means you are trying to combine all the elements and all the aspects of these systems together. So you're talking about integrating an application, you're also talking about integrating data. So with the integration, what happens is generally you unlock a world of possibilities, okay? And then you know a lot of information about your customers, about your suppliers, about the organization as a whole, and you can make effective decisions on it. Balanced scorecard enables organization to clarify their vision and strategy and translate them into action. Balanced scorecard views the organization from 4 perspectives: learning and growth, internal business process, customer, and financial. Now, balanced scorecard is basically a sort of a list of information or decisions which allows an organization to realign to their strategic goals. Okay, for example, if an organization has a aim, mission, and vision to do something as such, so the balanced scorecard and the list of the vision, mission, and goals allows the organizations or allows the organization to actually try to perform some form of actions which will allow them to meet those aim, vision, and mission and goals. Okay. Now, overall, what it does, it brings in a lot of growth and learning to the organization. It improves business processes. It brings in more customers and gives a lot of financial benefits. Now, the three primary ERP implementation choices are driving the next generation of business. So you have on-premise ERP, is whereby the ERP or the software is on premises. And then you have cloud ERP, it is whereby the hardware and the software is owned and hosted by a cloud vendor through the use of internet technology. And then you have a hybrid. Hybrid ERP is a combination of on-premises ERP and cloud ERP. Okay, now on-premises, let me just pull it out once again. It is where the organization stores the ERP software within the organization and totally owned by them. That means they buy the entire set of hardware and software, and they invest a certain amount of money in it. Now, cloud ERP, they also invest a certain amount of money into it, but not as much as on-premises ERP. And this is generally whereby everything is hosted on the web. Now, hybrid ERP is whereby you have some components within the organization on premises and some on the cloud or over the web. Now, we've talked about it on-premise ERP, cloud ERP. Okay. Now, some of the advantages of cloud ERP implementation. Now, what all are the advantages of cloud ERP? Those all would be some of the limitations of on-premises ERP. Now, with cloud ERP, you have a lot of cost savings. Instead of buying all the entire set of hardware and software and implementing it within the organization, you can have it at probably less than 1/4 of the cost, and it will be on the web. You have more flexibility. That means you can add or remove hardware or software at any point in time. For instance, if your ERP system on cloud has a data storage of 1 TB, now you can request the organization to increase the data storage from 1 TB to 2 TB by the specific amount of fee, and could be done within few seconds. Reliability. Why reliability? You know, the web hardly goes down. Everything on the web is available 24/7. Portability, you can access it from anywhere, anytime. Capacity on demand. Now, capacity on demand caters for scalability as well. That means if your number of users increase, you can demand for an increase in resources by a certain amount, and it will be implemented accordingly. With backup and recovery, is more likely you don't need to back up the data, you don't need to recover the data. Why? Because everything is done by the cloud service provider. Availability and accessibility, that means available 24/7, and you can access it from anywhere and anytime. Now, the major disadvantage of cloud ERP is security. Why security? Is your entire organization set of data is on the web. However, if it's on the web, doesn't mean anyone would go and steal it. There are some set of contracts, there are some set of service level agreements that you can feed in or you can sign with the cloud provider, and in case of unforeseen circumstances, the cloud provider could be held responsible for it, and you can probably sue them, or probably you can ask for certain amount of money as per the contract. Now, hybrid ERP splits the ERP functions between an on-premises ERP system and one or more functions handled as software as a service in the cloud. Scenarios common in hybrid architectures of ERP: a business with a very specific local focus, single site or multi-site with a single country or region. Okay, so probably one of the reasons why you would have a hybrid architecture of ERP is because probably the organization is located in multiple countries. Okay, business operations geared strongly toward a specific industry. For example, if the organization that you are working with or operating with, okay, generally is focused towards a specific industry, and the ERP for that particular industry is available as a hybrid ERP, so that could be done. So very same thing could be adapted to. A newly acquired operation with a mismatch of multiple outdated unsupported ERPs, a small company with no formal ERP in place. Yes, very common. Companies which generally have very little knowledge in ERP, or very small company which has never used ERP, they can always go and adapt to a hybrid cloud ERP very, very easily. Moreover, with a cloud, with a hybrid ERP, it gives you a sense of ownership and also a sense of control compared to the cloud ERP. With cloud ERP, you have very little sense of control. With hybrid, you have a way more sense of control than a cloud ERP-based system. So that finishes up our lecture slides for today. So it was quite a lot set of lecture slides. We had a total of 55 slides altogether. Now, what I would like you to know from the entire set of slides that you learn is on very basic things. Okay, one, know what is a ERP system. Know what are the functions of CRM, SCM, and ERP. Try to look at some of the advantages and disadvantages, the functionalities of the two. Also do go around and look at how the different type of integrations they work. Application, you have data integration, you have backward and forward integration. How do they work and how they aid in decision making. Overall, from this set of lecture slides, what you should learn is, or what you should know is this. You have ERP systems, you have businesses, and then you have technologies. How all three of these, they interact with one another, they work together, and they produce you with something that allows you to make profit, that allows you to increase the stature of your organization and improve your organization in more than one or many ways. All right. So this is where we will conclude in today's class. So thank you very much for joining in, everyone. Those of you who will be watching in the recording later onwards, thank you for taking out your time and effort in doing so. Yeah, on Friday's class, we have tutorials, the critic and the case study. Okay, the tutorial questions, please do attempt it in the forum and I will provide you with the simple answers. Those of you who have attempted it on Saturday, Sunday, and Monday, I will be feeding in the answers by Friday before our class. Also in Friday's class, we're looking at our research project, which carries about 15% towards the coursework and 5% presentation, total of 20%. Till then, take care, stay safe. I'll see you all on Friday. Goodbye, everyone. Thank you.